All right, guys. Welcome to Monday's course. So this is pretty simple. I've done other courses in the past. This is going to be very um, uh, to the point and direct. Um, This is gonna cover mostly the Q trend method that I've been trading with lately. We've been having a lot of success with. And then on Thursday, I'm going to do a quick review over the watch list method, which I think is a little bit less accurate. I really like the Q trend method a lot better. But there is some success with the watch list method, so I'm going to include that on Thursday's course. But uh, today is going to be a pretty quick class. I'm just going to we're going to get our feet underneath us, just kind of go over what we're going to go through. And again, this is really going to be a no fluff type course. Everything that I'm teaching is stuff that you absolutely need to know. Um, so let's just jump right to it. Uh, Monday, we're going to go over the outline, obviously, week ahead, expectations, what you can expect from me, and what I expect from you guys as well, because I really want you guys to take this seriously. This is going to be between like 5 to 8 hours of your life, but it has the potential to change your life and your financial situation. And I really do believe that. So today we're going to go over some terminology. It might be a little boring these first couple days, but I promise you everything that we go over is necessary. Some of you guys, if you've been following me for a little while, a little bit more, than some others, it may be a little repetitive. You may have a little bit of a step up on some people. So again, these first couple of days, just kind of bear with it. And a little bit of review of the information can't hurt. So we're going to go over some terminology. I'm going to go up today how to purchase options, set up broker dependent. We have it through Robinhood and Webull. I have a little instruction tutorial for you guys. We're going to go over your trading view, how to set up indicators and charts. And then if there's some time, we'll see how we're doing on time. We'll start going over some indicators, charts, time frames, stuff like that. But we'll see. I kind of want to keep things compartmentalized here. So and again, if you already know how to buy an option, this might be a little bit boring for you. If you already have your Q trend indicator set up, again, this information, is probably going to be a little repetitive to you. But all right, so let's jump into Monday. All right, so again, guys, this is a crash course designed to fast track anyone, regardless of your experience with trading, options, stocks, whatever. I'm going to teach you from scratch, basically how to use our system that we've been having a lot of success with. Um, so using these knowledge and skills required, it's a 1 week crash course. You can expect at the end of this course to have the raw skills and knowledge needed to make positive returns consistently. Um, while not everyone may see success after the first week, not everyone may be positive. You may make some rookie mistakes. It may be, a off week. But I do believe by the end of the week that you'll see what I see, and that this is a positive. You'll see positive progress. Is what I'm getting at. Um, Now, what I expect from you. So, a lot of people get into this, and they say, "Oh, they may have this, initial burst of energy. Oh, I want to do something. I want to change something." I really want you guys to take this seriously. So again, I'm asking for like 5 to 8 hours of your life. I don't think that's a lot for what I'm giving you in return, but I want you guys to take this seriously. So, um I'm starting. I dumped my Robinhood account down to $1,000. I suggest starting with the same $1,000 if you can. If you can't, I really, you really need at least $500, and that's really pushing it. That's going to get you about, maybe 3 to 5 trades in a day, which is doable. Uh, if you don't have that, uh, that initial startup, you can paper trade if you, you just don't have the funds, but you want to take some initiative. You can paper trade, options. I believe Webull has a decent option paper trading um, platform, and I would use it like you're using real money. So again, start with that $1,000 and trade like we're trading. Take the trades that we're trading. We're gonna probably start taking trades on. I have to look at the thing again, but I think it's Wednesday evening or Thursday. Um, Wednesday afternoon, I guess I should say. Do not. All right, so I'm gonna place a big focus on risk management in this course, and you'll see that a little bit later. Because I've seen it time and time and time again. People just blow up their fucking accounts, and I guess it's almost like a rite of passage where I'm the type of person where I have to learn, learn by doing and make my own mistakes in a lot of ways. But I'll get into that a little bit later. The point is, if you're starting out with this, don't start with more than $5,000. All right. If you have more cash than that, that's fine. You can add that later, but make your mistakes with small money first. Don't start with more than 5,000 for now. Yeah, 5,000 is definitely a good max starting point. You can turn that 5,000 easily into 10, in no time. So, um, again, make your mistakes with small money first. Number two, all right, and this is important, all right, because I know we have uh, a, a, a a ton of different experience in here from people that have been doing this for years, to people who probably have never touched an option before yet. So, what I want you to do is, regardless of that experience, I want you to follow all of our instructions and processes to the T. All right. So I don't care if you have, uh, 20, 30, 40 years experience doing this. There's probably a reason you're in here right now. Whether that's to, take your level up your trading. Maybe you're not having as much success as you want to. Maybe you're just starting out. But regardless of those reasons, I want you to kind of buy into this process. So put all that other shit to the side for now. All those other indicators that you're using, you can kind of take whatever you've learned in this class this week and apply that later if you want, and maybe you want to work in that Q trend indicator with some of your other indicators later, you know. But for now, I want you to just trust this process, and you kind of go what we're going through. And we're just going to use those two indicators to start, and we'll talk about that later, the Q trend indicator and the MACD indicator. And essentially, all we're doing is using two time frame charts, essentially the hourly and the 5 minute chart, and basically matching those up. And when all those indicators light up, if you will, that's when we enter the trades, and only then. Um, so, number three, I expect your full dedication, attention, and effort during this course. Again, this is kind of going back to what I was saying. If you want to have, serious success, you have to be serious about this. Don't half-ass shit. Don't put this off. Don't start the course today. And listen, I know life happens, and we're going to be doing this course. Um, I'll say at least monthly. I'm going to try and do it bi-monthly, and this is going to depend on demand. But so if you miss a course, and again, you can work with me. Some people might have to work on Tuesdays and Thursdays. They're going to miss those courses. I'm going to design these courses in a way where you'll be able to hit every one of these classes at some point. So, but don't half ass it, uh, reach out to me, and I'll say, hey, I can, our next course, you miss Tuesdays and Thursdays. Okay, well, take go Monday, Wednesday, Friday. Here's the information for Tuesday and Thursday. And by the way, in 2 weeks, we have a course where you're going to be able to hit this. We're doing a special evening course, or we're doing a special 1 day thing on Mondays where we're going through the whole thing, or we're doing a weekend thing, or something along those lines. But what I'm getting at is, as humans, we make excuses, right? Like, oh, well, I can't do this because of this, and oh, well, so put the excuses to the side for a minute, and try and buy into what I'm sharing here. What I'm sharing, I put, just last week I spent about 40 hours just building this course out. So um all I'm asking for is your effort and dedication, in return. Um and if you follow what I say, I promise you, you guys are going to see the results. You're going to see what I'm looking at. Again, you guys that have been kind of following me a little bit, a little bit more, have already seen some of the results, and that may be why you're here today, to get a little bit more knowledge. And just one last thing, I highly suggest you guys grabbing a pen, paper. I am going to record these courses, but write down, jot any questions you might have, anything you don't understand or want to ask me about, and jot that stuff down. Take it seriously. It's a course that, again, I put a lot of time and effort into. Put some of that effort in as a student as well, and you'll see the results. All right, guys, let's get into the terminology. So again, I'm not teaching you all the stuff about the stock market. I'm not giving you all the terminology you need to know about the stock market. I am strictly teaching you what the terms you need to know to have success in this class. And again, if you have success in this class, you can turn around and start making money as soon as next week, after this is concluded. So again, I apologize if some of this stuff is repetitive, boring, for some of you more experienced guys. Bullish. And again, this is all in my own words. I'm trying to keep it as simple and basic as possible so everyone can understand. All right. I'm not trying to be flashy or impress anyone. I'm trying to keep it basic, to the point, so everyone can understand. All right, so bullish, that's essentially when we're saying, when a stock price will go up. All right. Bulls are, again, stock price going up. Bears, think when the stock price will go down. Okay. It's that simple. What's a stock? A stock is a share or a piece of a company. All right. That's it. What's an option or a stock option? So I'm actually gonna put a link in here at the end because I really explain this better. I explain it like, in concert tickets or baseball tickets. I'll put a link in there, that just popped into my head. But essentially, what a option or a option contract is. So it's kind of like a stock, but the price moves up and down much faster. So think of it like that. And it also has an expiration date. So where's a stock, you buy it and you own it forever, an option has an expiration date on it, and we'll get into that a little bit later. Now we will almost exclusively be trading options in this course. There are two different types of options: calls and puts. Okay, that's really what you need to know as far as the basics. Now, when you buy a call or a call option, you're looking for the stock price to go up. All right. So you're bullish, right? When the stock price goes up, the option price or premium will also go up, and that's when we make money. If you sell, obviously. If the stock price goes down, we lose money. Now, if you know anything about options, and believe me, I do, there's so much more that goes into this, all right? But for the purposes of this course, I'm keeping it this basic because it really is going to be this basic for the most part. We're going to be in these plays for a very small amount of time. I mean, some of these trades, and again, I'm going to teach you how to do this. You're not always going to rely on me. You're going to be able to. Oh, great. Sorry, guys. You're not all only going to rely on me. Um, Let me plug this in before we find some trouble. All right. Put option. So this works the opposite way of a call. Um, Again, when we buy a put option, we're thinking the stock price is going to drop. And when it drops, we make money. If we sell the option when we're profitable, right? We'll get into that later. If the share price goes up, we lose money. All right. And we're keeping it that basic for the course. Underlying asset. So this list may get added to. Again, this is the first revision of this course. But what I basically went through is I kind of went through like a little bit of a dry run and started. I said, okay, what are some things in terms, that I guess normal people wouldn't understand. And this was one that kind of popped in my head that I say sometime. The underlying asset. So what this is what I'm saying that is I'm basically talking about the stock. So we're going to be trading a lot of SPY here. So SPY is an ETF. I'm jumping a little bit ahead, but it's not a stock. It's real. I'll change that later. It's an ETF, which is it's an exchange. I'm kind of going to see. It's an ETF is think of it just like another stock, but it's a fund basically. It's a compilation of stocks that track the S&P 500. So SPY, think of it like the stock market. But the underlying asset, going back to an underlying asset, that's basically um the stock. So if I said hey, let's buy SPY November 21st, SPY 450 calls, the underlying asset would be SPY. If I said let's buy November 20, what is it, 4th, uh Apple 200 calls, the underlying asset would be Apple. So just think of it like the stock would be the underlying asset. If it was an oil stock, let me stop. I'm going to go too deep there. Chart. All right. So all a chart is it's showing the current and past movement of a stock's price. All right. So don't worry if you've never looked at a chart yet. All right, we're gonna get into that, and we're gonna get into that today, actually. I think, and I'm gonna maybe not, maybe that's tomorrow. But don't worry about that. We're gonna have that covered. Uh, Technical analysis. It's just the art of reading charts. It's what allows us to do this. All right. Um, Tradingview. So what I'm gonna have you guys set up later tomorrow, whenever it is, in the course, is set up your TradingView accounts. You can use the free version. This is actually a really good time if you're really gonna take this seriously. Because I think TradingView is having like 70% off sale for Black Friday. So you can really get into their premium versions for very cheap for the year. But for the purpose of this course, I'm not looking for you guys to pay for more stuff. So the way I'm going to have this set up is you're going to be able to sign up for the free version of TradingView, and we're gonna set that up and set our charts up to the free version, which they just made more complicated with only 2 indicators, but
That's all right. We're one step ahead of them. An indicator. So an indicator is a tool that we use to help us read charts. Okay. So we're going to use two main indicators. The Q trend indicator. This is a custom indicator I found on TradingView after going through God knows how many indicators. This is one of my favorites, and it just uses math to to find trends and breaks and trends. And it's really an awesome indicator. Now you should really never use any one indicator, and that's why we also use the MACD. You're not going to see anybody else. I mean, if they do, I've never heard of them. I've never, I'm the first that I've ever used that I've heard of that uses the Q trend and MACD to uh to find trades. So you're not going to find this method anywhere else. I was The way I was taught was with the Q trend indicator and a money flow indicator. I saw too many good trades passing by, and I saw the MACD as a better indicator. So I decided to add the MACD. And after using the Q trend and the MACD, I actually not phased out, but if we're only using two indicators, I'm picking the MACD over the money flow index indicator. So the two indicators that we're going to use is the Q trend indicator and the MACD indicator. I'm going to show you all this stuff, so don't worry if you don't understand any of this stuff. But so a Q trend is custom. The MACD is very popular indicator called what it stands for is moving average convergence divergence, and it's the other indicator that we're going to be using. Trend. So the trend is the direction a stock or asset is moving in. All right. A lot of people, and myself in the past included, make trading harder than it needs to be. They really do, because when you trade with the trend, you think of it like you're just hopping on a wave is going by and you're a surfer and you're just hopping on the wave and you're riding that wave. Okay. You're not going to try and, go against the wave and surf it, right? No, you're gonna wait until the next wave comes, and then you're gonna ride on, and you're gonna you're gonna make some money on that wave. And that's all trading with the trend is, and that's all in simplest terms. That's all we're doing with this counter trend. That's going against the trend. Generally, this is not advisable for us with this system. We're not going to be doing much of this at all, because it's you're going against the trend. You're calling tops. You're calling bottoms. It's a sucker's game. So what we're doing is we're just again we're waiting for that wave to go by. We're jumping on. We're riding the wave. We're taking our money. We're getting off, and we're waiting for the next wave. That's it in a nutshell. DTE. So you heard me talk about 0 DTE, 1 DTE. This is days till expiration. Remember I said options have an expiration? All right. So this is how long an options contract has until its expiration date. So today, if you bought SPY, um, 1120 SPY 450 calls, 1120, that's today's date, right? So how many days till expiration is that? 0 days till expiration. Expires today. 0 days till expiration. If there was an option that expired on the 21st, tomorrow, how many DTE? How many days till expiration? 1, right? Simple as that. All right. DTE, days till expiration. You'll hear that a lot. That's all that means. Strike price. Think of it just as this is the designation of the options contract. So remember I just said, what if I said by 11:20 no, or November. When I say 11/20, that's November 20th. That's today. November 20 SPY 450 calls. All right. The strike price is the 450 part. And what that is it's just the deck for the purposes of this is it's just designating which options contract, because if you go look on your list of if you pull up for November 20th SPY contracts right now, you'll see SPY 450 calls, 449 calls, 448 calls and puts, and so on and so forth. So the strike price is that 450 or the 448 or that, and we're going to break that down a little bit further. So again, don't, if you don't understand it right now, you will, okay? But just think of it as a label for the option to identify it for the purposes of this. Again, I could go way deeper into what strike price means, but I'm not going to, because it doesn't matter for the purposes of this. So we're not gonna go deeper into it. I'm teaching you strictly what you need to know to have success in this course. That's it, guys. All right, at the money. So when I say buy a call that's at the money, so for example, let's say SPY is at $400 a share. It's at whatever it is right now, 451 or whatever. I haven't looked in about 30 minutes, but let's say SPY was at $400 a share for the purpose of this. So if I said buy an at the money call, you would buy a SPY 400 call because SPY is at $400 a share. Okay, simple, right? In the money. So let's say that same $400, it's still at $400. Let's say SPY still $400 a share, right? So if I said buy an in the money call, you would buy a SPY 398 or 390 or 399 call. All of those are in the money. $300 calls in the money. $200 call if they have them are in the money. Okay. What would not be in the money would then be out of the money. Okay. So again, using that same example, let's say SPY is at $400 a share. Out of the money would then be a 401 call or a 402 call or a 420 or a 450 or a $500 call. Those are all out of the money. Okay. So it is very simple. All right. All right. How to buy options. Oh, sorry. Let me go back here. So we're going to go into this a little bit deeper again on Wednesday when we actually physically go through the buying of options, and so you'll see this all in action. Um, but let's go over in basics how to buy an option. So this is also going to be dependent on the broker you use. So whether you use Robinhood or Webull or E-Trade or TD Schwab, regardless of who you use, they're all pretty much the same. Each brokers have their pluses and their minuses. Robin has a very simple layout, and they're quote unquote free options trading. However, their fills aren't the best. That's kind of how they make their money. Webull is slightly better. Their layup is a little bit more complex. So who you use as a broker doesn't necessarily matter. That's kind of up to you. Now brokers like TD and Schwab, they have better fills, but they charge you a bigger fee per contract. Okay. Again, I was supposed to post these referral links for Webull and Robinhood. I'll go back and do that after the course. And you can message me. Most of you are probably already set up. If you are not signed up for options trading yet, make sure you apply so we can get the ball rolling here.
If you have any questions with how to apply, whether or not you'll be eligible, DM me and I'll make sure you're set up. I think most of you, at least for the purposes of this first week, are all set up. But if not, please feel free to reach out for me. Now, unless you have over 25K in your account, I want you to set it up as a cash account. If you have over 25K, that's fine. You can then set it up as a margin account because you're not worried about the day trade PDT rule. Um, if you have if you have less than 25K, which I believe the majority of you do, make sure you have it set up as a cash account so you can so you don't have to worry about day trades. All right. I'm not going to go deeper into this, but uh, there's a good reason for that because if you have it set up as a margin account, and you have under 25K, you can only have 3-day trades per day. That's gonna limit yourself, you know. If you have a thousand, for instance, if you have $1,000 in your account and you're buying, at the money options, which are generally on average about $100 per option, then that's 10 trades that you can do in a day. But if you have the PDT rule, you can only do 3 in a week. Okay. So let's get past that rule. Let's set up a cash account. Again, if you have any questions about how to change your account from a cash account or from a margin account to a cash account, DM me. I'm more than happy to help. Um, Again, if you have over 25K, this does not apply. You can keep it as a margin account. Now, sorry, my computer came unplugged. Let me plug this in. Now, once you're signed up for a broker, you must then apply for options trading. That's what I was getting at a little bit earlier. There'll be a questionnaire, and because you're following my guidance, I might suggest selecting that you have at least 3 years experience trading options and have a high risk tolerance. Again, I'm going to be guiding you along the way. So, again, that's why would maybe suggest that you suggest or that you apply with those um uh with those answers to the questions so you will be approved. And within a day, I think it took like a day to get approved for me. Some may take longer, but within a day or so you should be approved for options trading, and you're now ready to start trading. All right. So the makeup of an options contract, all right, now that we know which options contracts to buy, generally we're going to be trading mostly SPY. Um, this is another thing I just want to touch base on real quick, guys. You can trade one stock and make money. All right, and I actually suggest I think we do like 90% of our trading with SPY. And we make money with it. We just ride those waves. When the market goes up, we buy SPY calls. When the market goes down, we buy SPY puts and we get on and we ride those waves. And this happens, fluctuates, and I'll show you in the charts a little bit later. It happens all day long, you know? So you can make money off just one ticker, all right? Generally we'll be trading SPY, and generally we'll be trading 0 DTE or 1 DTE contracts. Remember, I explained what those means earlier. Days till expiration. So these are contracts that have 0 expired 4 p.m. that day, or 1 day till expiration, DTE. They expire the next trading day. The reason we can do this is because we're only going to be in these trades mostly for a matter of minutes. So the expiration date is not as important as it would be if you're holding this contract for a longer period of time, where things like theta, which is the Greek for time decay, come into play. So As far as strike price goes, they're generally going to be right around the money. So if SPY's at, I have $400 a share here. Um, so today SPY's at 451. Generally, we're going to buy SPY 451 or 450 or 452 calls, somewhere right around the money. Or I didn't have the around the money as one of these uh terms, but around the money is basically just at the money or right around the money. So if it's at $400 a share, maybe 399 or maybe 401 or maybe right at 400. But that's right around the money. So another rule of thumb that I use is by 2 p.m. I start trading. I stopped trading zero DTE options, and I moved to the next day's options. So, by 2 p.m. at the latest, I'll move to. So today's the 20th. So generally, I'll trade zero DTE. So I'll trade calls for the 20th up until about 1 or 2 p.m. And then I will trade. I'll stop and for the rest of the day, if I'm trading, I'll start trading the uh 11/21, so tomorrow's options. And there's a couple reasons behind that. One is, again, because theta gets a little bit more aggressive towards the end of the day. And also because brokers will close your options and stop letting you trade around 3 p.m. 3:30, some brokers. But I don't want to deal with that mess. So we move to the next day's options by then. So remember I said what underlying asset is? SP, it says XYZ, but think SPY, SPY. So SPY, November 20th, 2023, 451 calls. All right. That's what an options makeup is. All right. And that's all it is. So you have your SPY, the underlying asset, 11 2023, that's when it expires today. 451, that's the strike price. Remember, that's the label or the designator. C or P, calls or puts. Remember what calls are? Calls are a bullish bet. We think the stock's going to go up when we buy calls. Puts are a bearish bet. Puts are when we think an option is going to go down or a stock is going to go down. All right, I kind of broke it down for you right there. So there it is again. All right. And again, we're gonna go through this and we're gonna buy options and we're gonna go through the whole process. So if it's not sticking with you just yet, it will, don't worry. So for Robinhood and Webull users, or just to get a better idea, there's a link here that shows how to buy our options contracts. We're getting a little bit pressed for time, so I'm gonna make sure you guys have this document. I've posted it tons of times in the Discord and the Facebook chat, but you should be able to click on here and then see I really go in deep into how to buy an option on Webull and Robinhood. But again, I don't want to spend too much time on this because we're going to go through this on Wednesday or Thursday and then again on Friday to make sure you guys have this all down. Setting up your chart. All right, so setting up your chart is a simple, straightforward process. The instructions I give here will tell you how to use the free version of TradingView, how to set your chart up. You may buy a premium package, but it's not absolutely necessary for the purposes of this course. So first, you're going to go to the TradingView website or app and sign up. If you haven't done that already, do it now. All right. They may push you to sign up for the paid version. Again, you don't have to do that right now. You can set it up for free. All you need is an email. All right. Next, you're going to go to the Q trend indicator. So Let me just kill all these. So what your chart's going to look like. Spies run a little bit today, huh? Hopefully you guys got some of them calls. So your chart's going to look like this. All right. X, X. Going to look something like this without the lines. All right. You're going to have a nice bear chart looking like this. This is the 5-minute chart. Okay. So what you're going to do, all right, you're going to have your blank chart. Why is this still here? It's going to look like that. Go up here to indicators. Okay. And again, we're on the 5-minute chart. You can favorite charts. I would favorite the 1 minute, the 5-minute, and the hourly and the daily. We're mostly going to be using the 5-minute and the hourly, and I'm going to teach you how to use the 1 minute as well for quicker trades. So we're on the 5-minute chart right now. It's going to look something like this. Go to indicators. You're going to go to search. Type in Q trend. Okay. And you're going to see this. You're going to see a bunch of stuff here, but you're only going to see one indicator that says Q trend, just Q trend. All right. Go ahead and star that. All right. Star that. And then double click it. No, you just click it once. Okay. And now you have your Q trend indicator. You get 2 indicators for free on TradingView. All right. Next, you're going to type in MACD. You're going to see a bunch of indicators come up. All right. Under technicals here, your screen should look just like this. You're going to see moving average convergence divergence spelled out just like that. Go ahead and star that and click it. There are your 2 indicators. That's all we're going to be using for this, guys. And just real quick, I'm going to show you how this is playing out. All right. You're also going to change the settings here in a second. Let's do that first. So on your Q trend here, you're going to change your settings. Your ATR multiplier here, you're going to type in 1.75. Okay. Press OK. And signals to show. If it's not defaulted at all, press all. Those are the only 2 things you're going to change. Now here, this is why we don't use just one indicator, okay? Because we got a buy signal here, right? Then we got a sell signal here, okay? So, oh, let's buy puts. No, you don't have a MACD cross here. Well, it went for a hot second, but not really. What you're looking for is this bullish MACD cross. It kind of tried to, at least, but what we're looking for here, this isn't the best example, but again, what we're looking for here is a buy signal and a MACD cross. And when we get that, we would enter calls. Okay. And there's more to it. I'm going to go in a little bit deeper because the hourly chart matters too. We're still on a buy on the hourly. I don't want to go too deep and confuse you guys yet. So your second indicator is down here, the MACD indicator. You're not going to change anything on this MACD indicator, okay? And again, you can kind of mess around with your charts a little bit and set them up and the way you want them to be. But these are your 2 indicators that you're going to be using. That's it, guys. MACD and Q trend. And they're set up. After you change your ATR multiplier to 1.75 and the signals show all, you're all set. All right. Now, what I should say, what you want to do is also save this chart. Okay. Save it to whatever name you want. But save it so it's set up the way you want it to be. That's not the chart we were using. This one was. Okay. So go ahead and save it. I'm not going to save it because I have a different chart saved onto this, but save it, name it, and that's what you're going to use. Or, I mean, you could just set it up every time. It only takes 2 seconds, especially if you know what you're doing. But you always want to make sure. I've been toying with this a little bit. Some people use 1.5. Some people use 2. I like 1.75. It's right in the middle. Um, and just make sure you have signals to all. That's all you need to change. And you have your Q trend and your MACD indicators set up. Okay, we're all now set up. End of lesson summary. All right, this concludes our first lesson. All right, we're just under an hour, so good on time. If anyone has any questions, comments, issues, concerns, anything you don't understand, anything you jot down that you need clarification on, now's your time to ask. You should be able to unmute yourself. You can ask in the chat if you have any questions. Um, I'll give you guys a second for that. Let me just pull you guys up. Anybody have any questions, comments, concerns, clarification, anything you guys don't understand? Again, we're going to get deeper. This is the foundation for what we're going to build on the rest of the week, and you can kind of see again when we're getting to the charts. So you're now set up to trade options. Again, make sure that you apply to trade options if you haven't. Make sure your account's funded. Make sure it is a cash account if you have under 25K. Um, uh, make sure you know the basic terminology. You can go back. Again, if you need, I really tried to keep it as basic and simple as possible. Um, Make sure you know what an optional alert is, because what we're going to end up doing is once I guys teach you guys this stuff on the back end for our premium, I'm going to start putting out a lot more of these Q trend alerts once everybody understands the process. Um, but again, once you guys are really once you know how to do this, you won't be so dependent on the alerts. Also, you'll be able to in your free time, obviously, when you're able to, you'll be able to do this on your own. And then you can kind of follow the alerts when you can't. Um, and if AI ever catches up, I've been to our I guess our standards, and this is probably something we're going to have to end up building, unfortunately, to do what we actually want it to do. Once we get that down, that's going to be a complete game changer. But don't expect that anytime soon. But know that we are working on towards it. So you now have all the basic tools at your fingertips. Next lesson, we're going to learn how to use these tools at our disposal. We're going to look at different time frames of charts, like I just showed you the 5 minute hourly. Kind of just peeked ahead a little bit, but I'm going to go in deeper and explain how we use the different time frames to work together to give us the best quality setups to trade. We're also going to dive deeper into the two indicators we're using, the Q trend and the MACD indicators, so you know exactly what to look for. when, and where. All right. And again, guys, this may seem like a lot of information at first, but I assure you, everything that I'm teaching you right now is stuff that you absolutely need to know for this system. I'm trying to keep it as basic and easy to understand as possible. And you know, again, this is going to come in just a little over 5 to 8 hours max of your life of time is all I'm asking you for. Again, make sure you have a pen and notepad during these lessons. You're jotting down everything you don't understand. And again, if you need any clarification at the end of the lesson, um, feel free to ask. And if you need to, it's something you don't feel comfortable asking in public, you can ask in private. So again, although this is a custom proprietary system, it's very simple and it's all math based. All right. You don't actually have to do the math. The indicators do it for you. You just need to listen to what I'm saying, listen to what I teach, and follow the directions. All right. And that's the end of the lesson, guys. One last time, anyone have any questions, um, comments, anything they want to add? I think you guys are mostly still all muted, but you can unmute yourselves or ask in the chat. If not, we're right at about an hour, right under an hour for the lesson, which is really where I want to be. I don't want to spend all day on this stuff. And if nobody has any questions, I will see you guys tomorrow, 10:30, same time, same start time tomorrow. Tomorrow we're gonna dive a little deeper into the charts a little bit. It'll be a little bit more interesting. Apologize again but we need a good foundation to build off of. So, if nobody has any questions, um, then I appreciate you guys time, and I will see you guys tomorrow. Thanks, guys. Oh, hang on. Okay, just a thanks. All right, guys. See you guys in the 10:30. Same start time tomorrow. 10:30 Eastern time. Start time tomorrow. Be there. Be square. See you guys tomorrow.